Welcome back everyone to the second video in this series where we're covering a business pro forma, how to fill it out. We're going through some of the terminology. We're going through each tab and I'm illustrating how each of the tabs fit together, how the formulas are built in so that you know how to manage this on a monthly basis and understand why we're doing what we're doing here. And I realized at the end of the first video I missed an opportunity to show you the first illustration of how the formulas are built. So as you can see here in the tab I have highlighted here at 200 going up. So if you go up here in the top left corner into the formula bar, you'll see this tab is, this number is represented by the cell D6. So D6 at 2 units times E6 at $100 per unit cost, which gives us our $200. So the only numbers that we're going to be modifying here are going to be these numbers here in the middle. Now you might be wondering, well, why would we do that? Why are we breaking it down on a per unit cost, and why would we do that as opposed to just assigning like a total amount for each? The reason for that is because we want to be able to pay it. We want to first be able to itemize each of the marketing channels or advertising channels that we are going to be spending money, because as you recall, this is just money that we're spending to get in front of the right eyes. And so, for example, the reason we want to itemize and then assign a unit and then a per unit cost is because maybe, for example, print advertising on a monthly basis only generates 10% return on the total amount spent, whereas maybe digital media is returning 100% of the investment of cash in the digital space. So in that case, we might want to take some of the allocated capital from print advertising. We might want to allocate it to digital advertising since it gives us a much higher return on investment. That's why we want to break down per unit, or per units, and then the unit cost that we're assigning to each, so that we can analyze this on a monthly basis and determine where are the most effective places to allocate our cash, allocate our resources, because we want to put our resources in the places that are going to give us the highest return on investment. So that's why we do this here. So let's go on to the operational cost now. And this is probably the first place that I can illustrate to you the significance of the business drivers tab and our starting point here. So as you see in this highlighted tab that I have here, 5/1/2023 is the date that our model begins. Now, if you go up into the formula tab, you'll see business drivers at cell C5. And let's go to the business drivers at cell C5 and see what it says. So business drivers, cell C5, there we are right there. So this right here is an illustration of how when we change this date, it will also change that date on each of the other tabs here. So this auto-populates based on this right here. Since this is connected to the business drivers tab, these tabs are speaking to each other. So let me illustrate to you how that works, and let's change this to 6/1 and hit enter, and now let's go to the operations tab, and you'll see that it updated it here as well to 6/1/2023, again referencing business drivers at cell C5. And then the same thing it did for us here, it also updates each of the months for us so that we don't have to change each month. Now we'll go back and let's change it back to 5/1 and then hit enter. We'll go back to operational cost, and there we are. We're back to May as our start date, and there you have it. So anytime you need to change a date, because I realize maybe you're seeing this and it's November, December, January of next year, and it's nowhere near May of 2023, the first place you're going to want to change this, don't change it here, because you'll override that formula. Don't change it here. Why? Because there's also a formula built in as well. So anytime you need to make a change to a date, a start date, whatever it may be, change it at the Business Drivers tab. And it will save yourself a lot of hassle, because that right there is speaking to every other tab. So back to operational costs, and let's get into some of these costs here on the left hand side. First, we have admin costs. This is obviously going to change based on the business, based on the industry, the business model, etc. So basically all we want to do here is identify the administrative costs that we have just to stay in business on a monthly basis. So what does it cost to operate our company? So we might have rent, we might have telephone and internet, utilities, maybe business insurance or E&O insurance, supplies for operations, software subscriptions. I have $0 here plugged in for rent, because I think a lot of people work from home, they work remotely, they're not paying a rent for office space. So if that changes for you, maybe you do have an office, just plug in whatever that monthly rental amount is. But anyway, this is where we're plugging in our total annual amount of admin costs. And then what it does here for us on starting in each month is it takes that total annual cost. So at cell D11, if we move over to May, it'll show D11 divided by 12 months. And that is the total amount that we need to account for on a monthly basis to make sure that we can cover that annual insurance expense. So let's just say, for example, your insurance you pay for on an annual basis. So you don't have a drain or a monthly strain on that cash flow, but we do need to identify it and account for it so that by the end of the year, when it comes time to pay for that insurance again, we have driven enough revenue through our business so that we can set these funds aside to cover that $1,000 insurance expense for the following year. Same thing for supplies for office or operations, software subscriptions, etc. Again, so this is right here is going to be a sum, and then this is a breakdown of, okay, for all of our admin costs, we need to drive at least $375 per month to cover all of our admin costs. And then down here, I have travel and professional development costs. Maybe you're just starting out and you won't be doing any traveling, you won't be going to any conventions because it's just not the right time for you, whatever it may be. I do like to plug in at least a small number just to account for unexpected expenses. Maybe there's something that comes up and somebody's going to be there that you want to meet and you need to make a connection. I do like to account for that, just so, again, we have a realistic picture of how much money we need to be driving through that business so that we don't feel strapped and we don't feel like our decision-making power has been taken away because we weren't pushing hard enough. So again, I like to be realistic, but also put some pressure on some realistic pressure on what we need to do monthly to be able to have some freedom here to make some choices that we might want to make and put ourselves in a competitive advantaged place. Okay, then we account for some miscellaneous costs, network fees, market research, petty cash. I don't have anything plugged in there, but if you want to plug in something that might be relative to your business, this is the place to do it. Moving down, okay, that's it for operational costs. Now let's go over to HR costs, and it's going to be the same format for the HR costs. Again, you'll see here, start date May 1st, again, auto-populated here with the formula, no problems. Now, we're going through the same exercise here that we did with the operational costs. Only difference is now it's payments that are going to be made to our human resources. So we have executives. We're plugging in their salaries here. So this is, again, the annual expense that we have to employ our people. And then, again, here, as we move into the months, you'll see that we break down on a 12-month basis what it costs or what the strain on our monthly cash flow is for each person. And so just for executives in this example, a total executive leadership expense, we have salaries worth $130,000. This is the sum of everything we identify here under this tab. And then, so our monthly expense just to keep these people employed is almost $11,000 per month just to keep them employed, assuming they're collecting a salary. And then again, as we move down, these are just other examples of potential salaries that you might need to have for a team. Let me point out here, I do at the end, I like to account for a bookkeeper or an accounting staff, an accounting expense, usually in the range of like $5,000, because at the end of the year I like to have a bookkeeper that knows my business and knows how to take advantage of everything that we should be taking advantage of from a tax standpoint. Usually that runs around $3,000 to $6,000, $7,000, depending on the year. And we want to account for that here. Why? Because we also want to make sure we're driving enough revenue to be able to set $417 aside every month, so that at the end of the year we can have a high quality accountant, CPA, bookkeeper run these numbers and make sure we get the most benefit humanly possible. But if we don't account for that, we don't drive enough revenue, we won't be able to pay for that, and we might lose more money just because we didn't push hard enough to make that happen. So again, all of the HR costs or expenses that you're going to have as far as hourly rates or salaries go, that's going to change based on the industry, based on the company and the business model. But you'll identify that here in the left-hand side. And I'll just arrow down here. You'll see there's no formulas really plugged in here except for our start date. And then the other numbers we're going to change fall in the salary, the annual column here. And then everything gets updated as we move down. I will draw your attention here to the payroll expense, the health insurance expense. This is where we're accounting for all of the annual for every month, May through the following April, of what it costs to pay all of our people, and then what it may be for health insurance to employ all of our people. And then outsourced services, again, this is going to be like maybe not W-2 employees, maybe these are contractors. These are like IT specialists. Maybe this is outsourced video editors. Maybe it's as you see here, an outsourced cleaning service that's not, doesn't justify having a W-2 employee that is in-house and we're paying on a monthly basis. Maybe this is like on an as-needed basis. We still need to account for an annual total expense. Why? So that we can drive enough revenue to pay for it when we need to. Okay, awesome. I'm going to cut this one here, and I will see you in the next video where we're going to go over capital expenditures, and you'll see a little of the difference there between HR costs and operational costs, but I'll see you in that third video.